Spilling the Realty episode, interest rates, reality checks, and the 30-year loan. Hey everyone, welcome back to Spilling the Realty, where we break down real estate without the fluff, the fear, or the nonsense. I'm Michele.
And I'm Logan, here to ask all the questions people my age are actually thinking, but don't always say out loud, me included.
And today we're getting into something everybody needs to understand: interest rates. What are they, how they work, and why they swing the way they do. And yes, a little history lesson on the 30-year mortgage, because it's actually way more interesting than people think.
Especially buyers my age who are trying to start families and figure out how to get into a home.
Exactly. So grab your mug. Let's pour some tea today. All right, so this section is called Bitter Truths, and it's going to be understanding interest rates. So interest rates are simply the price of borrowing money. When inflation is high or the economy is running too hot, rates climb. When things start to cool down, rates fall. That's the short version.
And my whole generation is always asking, why can't we just go back to 3% interest rates?
Because 3% was an emergency pandemic era rate. It wasn't normal, it was temporary. In fact, when I first bought a house back in 1986, I was paying almost 9, and I talked to people like my parents' age, and they were paying somewhere around 13%. So 3% wasn't normal. And so just so you know, before we go any further, I want you to remember, I'm not a lender or a mortgage broker. I'm giving the real estate perspective. Always talk to a licensed loan officer to understand what makes sense for your specific situation.
Please do. Every buyer my age has a different financial picture. You're not the same as your best friend.
That's true.
Okay, Mom. So now we're going to move on to the 30-year mortgage. And I want you to give us a short history lesson on it. So here's my question of the week. When did the 30-year mortgage even start? Has that always been the standard?
Nope. Before the 1930s, mortgages were actually 5 to 10-year balloon loans, which means huge down payments, interest rate only payments, and then you had to pay the whole thing off at the end. During the Great Depression, the government stepped in and created the 30-year mortgage to stabilize the market and make home ownership possible. And now, almost a century later, even our president is kicking around the idea of exploring longer-term structures like a 50-year mortgage as a way to help with affordability.
So basically, the 30-year mortgage, what you're saying is it was invented because the old system wasn't affordable. And now we're circling back to that same conversation because we want to make it so people can buy homes again and make it a little cheaper on them.
Exactly. So that's probably why they're starting to kick this around, because right now sellers aren't really coming down, buyers aren't coming to the table, and our country has always been built on people finding land and building their home. So,
Okay.
and so just that's how our 30-year mortgage came about. It was designed to make home ownership realistic again.
And honestly, that reminds me a lot of what you say to sellers when you go on your appointments and stuff. You tell them that same exact thing.
You're right. Because just like the loan system had to face reality, sellers today have to face a new one too. The 2021-22 boom gave a lot of homes an extra, sometimes 100,000 of a temporary value. And
Wow.
that bubble, unfortunately, has long gone now.
Mm-hmm.
The tease for our sellers is we have to have a reality check. Sellers, let me spill this gently to you. If you're still clinging to the 2021-2022 pricing, you're kind of living in the past. That was a once in a lifetime market fueled by historic lows. Historic lows. The inventory was low at the time. the historic rates. The rates were very low because people were stuck in their homes and the government needed to get people to get out and buy a house. Also, we had migration surges, which especially in Florida, people were leaving their states and coming to Florida. Investors were paying cash, and that is true. They were paying cash, but they were paying very low. So those houses that were like 120, 130 back in 2020, they bought for 130, 140, turned around, fixed them up, sold them, rented them, and over 18 months pushed those prices, those 140 houses up to 250, which, that's kind of strange. That doesn't happen in a normal market. Also,
Mhm.
during that time, because there weren't that many houses on the market and people wanted a house, buyers were waiving home inspections. They were, just basically buying the home as is and not even finding out what's going on in that house,
Yep.
and pure panic buying was happening at that time. So, we are now in 2025. The height of the market was in July of 2022. So 3 years later, the market has kind of shook itself out. It's making some mild adjustments every 30 days. It's adjusting, and so what happened back then there because of the pandemic, we now need to get back to normal.
Seeing that, and that's what I was going to talk about. I would show houses to multiple of my friends, and we would go there, and I would ask the realtor. I'd be like, "Hey, they're very interested in this home. Um, do we have a chance?" And she's like, "Well, make sure you're going to have your offer in today. We've got about 10 to 15 offers already in, and people are going cash over asking, which that it was crazy. Like I said, we would put our offer in and we would lose out, get outbid by like 12 people. It was insane.
I know. And that really wasn't normal. That market wasn't normal either. And that isn't coming this way anymore again. I think our market is going to come back, which, we're starting to see it actually come back just in the last week.
Yep.
Putting houses, we got one closing this week. We just put one under contract. We've got a couple contracts coming in. So things I can see are starting to right themselves even, as we're speaking right now.
Yep.
The thing is you need to protect yourself. And let me say this clearly to our sellers. This isn't me telling you what your home is worth, because but you can put the value wherever you want it to, but you don't really set the value. I don't really set the value. The market is what actually sets the value. What the seller and the buyer think the home is worth. That's its market value. And my job is to show you what today buyers are actually paying, what appraisers are supporting, and what will get you the most money in this market. And this isn't the market of 2021, so it's the most money of this market.
See, it's funny. I always hear you say, "Don't shoot the messenger. I'm just reading the data." I mean, your whole process is data driven. So we're giving you the information and the numbers is the best way to put it.
Right. And we listed 2 houses today, and that's exactly correct. When I come out, I'm not bringing a fluff piece, but
Yep.
I'm showing you what the county says. I'm showing you what has sold in the last 12 months, how many things are under contract, and how many that are active that are sitting there and
Yep.
and not moving. And a lot of them are not moving because it might have been snowbirds neighborhood, and so that's starting to pick up now. But the thing is that a lot of people just want to see where we were going to go. What I'm saying here is I want your home to sell fast, and I want it to sell for top dollar, but the only way that happens is when we price it based on reality, not nostalgia. But here's some good news. If you bought your house in 2020, or you've had your house before 2020, you are still going to win big. And as long as you didn't refi it and get the equity out of it, you're still going to be sitting on incredible equity, because you figure, Okay, so the house isn't what it was in 2022, but it's still huge from what you bought it for. So, you know, you might not get that 100 grand bump. What if you get 50? What if you get 75? This is still good. It's still a
Yeah.
huge profit. You just can't, you just can't have what the the bubble price, that you just can't. It's not, we're not there anymore. So
So what you're pretty much saying is sellers didn't miss the window. They just need to price for this market, not the fever dream market of 2021.
yeah, that's true. There's still amazing opportunities, and you just have to be realistic. So here's what we could take away from today's podcast. Buyers, you need to understand how rates work, and you need to talk to a lender so that you can plan smart. I know some people are getting rates in the fives now. Now they're not broadcasting it to everybody because not everyone will qualify. But if you've got squeaky clean credit, you've got a nice down payment, and you're doing, you pay your bills on time and all that kind of stuff, you can get a good rate. And sellers, you still have fantastic equity in your house. You just need to price your home for today, not yesterday. And everyone remember, the 30-year mortgage itself was invented during a crisis because the market had to adjust. This is just another adjustment period.
And adjusting doesn't mean losing. It just means being smart.
It does. That's true. So thanks for hanging out with us today, everyone. If today's tea helped you, share it with someone who needs to hear it.
And new episode every week. And if you want to understand how to buy or sell in this market, sign up for our workshops at spillingtherealteapodcast.com.
All right. Until next time, keep sipping smart.